Hello, everyone. Happy Monday. How is everyone doing today? Hope everyone had a wonderful weekend. Good morning, John. Good morning, Sterling. Good morning, Patrick. Thank you for putting in all the information on the Bank of Japan. They're sort of in between a rock and a hard place with yields climbing, and they've been the market for the JGBs. So, what else do we have? Good morning, Bull Strike Cheetah. Good morning, Jacob. Good morning, PMG. Good morning, David Atkins. Good morning, Harold. Good morning, Heinrich. All right. I agree. I think the markets are complacent, but we shall see how it all ends. All right. We also have crude. We have natty gas futures. We have crude rallying. You have what was it? Did you put that in there? That where is it? Where is it? I agree. EU strong regrets. U.S. decision to raise steel tariffs, again, steel and aluminum tariffs, 50%. I have nothing to say. Iran's response could be considered as a rejection of a completely one-sided U.S. offer. So that's why we see crude rallying. It will get interesting, but the stocks are very complicit. Completely agree with that. Good morning, Daniel. Thank you for tuning in. All right, what do we got headed up this week? Well, we're going to cap it off with non-farm payrolls on Friday. But before that, today we have the ISM manufacturing numbers. We have Logan and Goolsby speaking. Yay, more Fed speak. Tomorrow we got Jolts, Redbook, and more Fed speak and factory orders. Wednesday, more important ISM services. ISM services on Wednesday, and then we have the EIA numbers. Thursday, we have jobless claims. And Friday, we have non-farm payrolls. So Wednesday and Friday are the biggest events this week in terms of reports coming out. But then we always have day-to-day stuff from the administration. Good morning, Royal Palms. Good morning, Jake. Did you get my response, Jake? So Google down, Boeing up, energy up today with a strong rally in crude. But Google's the biggest mover in terms of the mega caps right now. In terms of the groups, we'll just do a quick refresh on this. Comm services led by Google is down, but the big one shining in the stars today is energy and basic materials. Gold also up. Fed Watch still has a pause in June and a pause in July before a cut in September. Fear and greed still in greed mode. Shiller PE still above 36. In terms of earnings, it is June already, Richard. We had Campbell's this morning, SAIC. We have Dollar General on Tuesday, Dollar Tree on Wednesday. It's the dollar earnings week. Hewlett Packard Enterprise CrowdStrike after close on Tuesday. Big thing this week, though, is Broadcom, DocuSign, Lululemon after the close on Thursday. And then not really anything on Friday. I'll look at Dollar General and Dollar Tree to see as a consensus for the lower end consumer. But the bigger thing is, in terms of earnings is going to be after Thursday's close. So, you are welcome, Jake. All right, where do we sit? S&P. S&P so far inside data Friday. We do still have a potential double top in place. We still have the rotation zone sitting down below around 58.20. Key things I'm looking at this morning, besides saying good morning to McRangers, and Anissa. Wait, hold on. Breaking news. Sterling's heading to the beach on Tuesday night. We'll only have a laptop to work on. I will do the best I can with the news. Well, thank you very much. I hope this is a nice, relaxing vacation for you. So here's what I'm looking at. I'm really watching Friday's high and low. But my early warning signal is about 59.20 on the S&P. That's going to be short-term resistance unless we can base above there, and then I'll be watching the high for the breakout. Same thing on the breakdown, 58.67 area, but really then the low below Friday's low is the real breakdown level. That's exactly what I'm looking. In bigger picture, besides having a sip of tea, we're rolling over into cycles on the daily. and weekly is at the top. Now, we still have the first cross the rotation zone at the weekly, so I'm paying attention on any sell-off to the lows from Friday the 23rd. Not only is that a potential trigger for a double top, I'm treating that as key support going into it unless we triggered a double top, which would have to be a daily close below that level. And we have the 50 EMA right there. So that is critical on any pullback. Remember, we don't have to have a massive sell-off. We could have a sideways consolidation up here. Unless the double triggers. Now, if that double were to trigger, where could that potentially take us back to? Could potentially take us back to, key areas around 55.20. So that's going to be very key if that is that a market like, a huge sell-off? No. We've had a very strong run-up. That would be, it would do some minor technical damage, but nothing much. Not much there. But if that double does not trigger, then I'm going to be watching for consolidation in here. So, China, Ukraine, Iran, and global debt, what else could go wrong? Nothing. That's why the market's very complacent. And tariffs all over the place. So, what could go wrong? What could go wrong? But, if we do, the point that would invalidate this double, if it does go to the upside, would be a move above 60.5275. There is a fair amount of overhead resistance that would be trading into on any upside break. Okay, and then the next major area is right around about 61.38 to 61.66, where we topped out multiple times prior. So, NASDAQ. Looking at the same thing, my overall is the highs and lows from Friday. Going into before that, though, we have 21.70 area as the potential support / if we roll over through that, that's a breakdown level. Then I'll watch for Friday's lows. The breakout level I'm watching is I'm just watching Friday's highs around 21.4433. That's in the short. In the bigger term, there is no potential double top in the NASDAQ. If we do break down, my major targets are 21.95 and then right around 20, and then around 19,800, 19,820. But in the way of that, we have the rising 50 and the hooking up 200. So what we're looking at there, again, cycles at the top rolling over on the daily and headed down on the weekly. Well, there you go. Good. There you go. Thanks for posting that in there, Heinrich. Thank you for posting that. So, the Dow, again, potential double top, watching Friday's high and low. The overall cycle's rolling over on the daily, weekly. There is a double top that would need a daily close below 41,236. So double in the S&P, or potential double in the S&P, potential double in the Dow, not in the Russell, and not in the Russell or the NASDAQ. The Russell support level is 2041 unless we break below that. And then the next major support is 1981. The key resistance is 2126. Other than that, not much to talk about. Minor resistance level is a 2089. VIX a little up, but nothing really not basing above 20 yet. If we start forming a solid base above 20 and moving higher, then I'll watch for a more substantial breakdown. DAX, we still have the potential double top in place, not triggered or confirmed yet. It would be invalidated on a move above 24,442. The key support area I'm looking at in the DAX is 23,660. The notes, the note futures, which technically triggered the %B buy reversal, I'm though watching because there's a very strong overhead resistance at this 111.02. Okay, and that's a %B buy in consolidation. So just take that for what it's worth. I'm more looking at consolidation and then a potential move up back in yields. Now, back to the note futures, we do have cycles pinned to the top, still heading up on the weekly, but in consolidation. That's what I'm watching. It really has got to get above that 111.02 before I'm interested, which would mean I'd watch for a breakdown in the yields. But with the yields getting to the bottom of the cycles, I'm watching for any key breakout. The real key breakout level I'm looking at now is about 445. 445, just above that is what I'm looking at. 30-year yields still testing a little minor resistance level. I'm going to be watching if that starts getting above 5% again. It came down to a rotation zone and a key support area, but there's nothing for me to do with the yields on the longer term unless we start breaking above 5% again. Then I'll be really interested. Dollar index. This is not a double bottom. It's not reversing enough of a move. It would still mean the key inflection point from the highs on May 29th are still key, but you can't use double targets. I'm watching to see if we close below this channel, and then we'll be watching for a return to 98 and a potential. There's very strong support between 98 and 97.60. Very strong support. If that were to break down, key is 96.53 to the downside. Still on the bigger picture, this does not invalidate anything on the bigger potential double bottom. All right, that's what I'm still watching for, unless we close below that 96.50 or trade below that 96.53. I'm still watching longer term. That's a very potential longer term setup, though. Crude, we had the confirmed but never triggered. There's buying pressure. Look at these days. 1, 2, 3, 4 days. And then with the possible breakdown with Iran talks, this is off the table. We're coming up to very key support. I'm still watching this. Just call it 65 level on a closing basis. I'm still watching to see. If we got a daily close above there, I'll sit up and take notice, but I need to have it on any long trade follow through with a weekly close. Natty Gas, also big day up, but Natty Gas heading into very strong resistance on a continued rally. Natty Gas has major overhead resistance around this 380 area. So it has to, any pop here has to sustain something above there. Otherwise, I'll be watching for a potential rollover play again in Natty Gas because it's in consolidation. Gold, talked about this. It did close above the 62.5. It's now moving up. I was watching for the breakout of this upward channel lines with my minor target being 34.13, major target being 34.61. So there we go. What else do we have? We have the yields of sideways 10-year. The 10-year Japanese yen has moved sideways. I'm going to be still watching it. If this breaks above 1.6, it's going to be really interesting. It's pulled back from recent. Look, it topped out, and topped out again. But if this it's trying to build a stronger base. That's going to be interesting as the 40-year yields, which went completely vertical, have pulled back. But I'm paying attention to the 10-year yields on the yen. The yen, I'm going to be watching for, again, to possibly retake the 140.98 or 141 area. Euro, I'll be watching this with this rotation back up. I'm watching for the euro to return to 115 area and potentially set up a massive double top pattern over the next few weeks. Spiders, we still have the potential double top in that. Just like the S&P, the spiders would need to close below 575.60. Other than that, trading down a little for the short-term stuff on any rally. We'll be watching for the gap fill to 589.39 on any rally. But if we take out Friday's lows, 583.24, going to be watching for a bigger pullback, and 578, just above 578, 578.50 is very key support. Beyond the gap fill, there's very key resistance right around Friday's opening reversal price, which is also right around this doji day from Tuesday. So that's going to be very key on any rally beyond the gap fill this week. 593.06. The Qs gap down again. 516.66. First on any rally would be the gap fill of 519.11. There is major resistance around 522. 515 is key support, and if that breaks down, be looking at Friday's lows, and then you still have a gap that remains from this upside back to 509.29. Now there is still, just unlike the Nasdaq, there is still a potential double top in the Qs. Hey, Christoph. What else? Bitcoin. We had a double top triggered on Thursday. First and second targets hit. Little bounce back up, but looking for that final target back around 102,500 still. So, and then potentially if it does go beyond there, again, there's no major short. This is just a pullback short. 100, 700 is very key. So, that's where we stand with Bitcoin. Let's see. What did you ask, Sterling? Is there a potential double bottom in ZT1? I wish it would do that. Come on. What's going on? Okay. Let's try it this way. There we go. Is there a potential double bottom? That would not be a double bottom, no. And the gap up is due to the contract roll today, by the way, anyways. What else? ZW has been very interesting, as if anyone's following it. Let's take a look at the wheat futures. Trying to build a higher base. Can't trade that as an inverse head and shoulders. Really key, though, is going to be this 558 to 560 area on any rally there. Breaking out of a short-term little base. Hello, AAF. What is it? AAFWNET. All right. Other than that, we do have Broadcom against major topping area this week. Major topping area. We've checked off the 87.5 again. Going in there, if it does do something upside with an earnings surprise, the key levels are 266 and 280. 266.10 and 280.33, but those are the key levels on any gap up. Key support, minor support is around 225. And on any bigger miss on earnings, you'll be around 210 and 195 are the key support levels. I've not checked the options yet to see what kind of move they're pricing in. I'll do that closer to earnings. Remember, that is on Thursday. Tesla, not much going on. Again, key area for me to start watching if we do break and start closing below the daily rotation zone. But then I still have targets to a gap fill below that. Remember, it's in the, we have not closed above the 62.5 yet, so I'm still watching for rollover plays. You look at longer term charts companies this weekend and found something interesting in BBY. Take a look at the monthly. Take a look at the monthly, huh? It's very strong. So there's, I mean, you got massive support, massive support shelf between about 57 and 52. Massive support shelf going 19, 20, little higher there. So let's dial down. It spiked down that 57. Little bounce in the rotation zone. I'd still be watching for a retest personally of these key levels. I mean, they beat and missed on revenue. I'd be watching this longer term. Excuse me. Longer term. There could still be some support plays down here should it get back down here. But overall, what I'd be interested in is if it came back down here and then eventually triggered this double bottom. Other than that, there could be some targeted butterflies, condor plays down here. You know, especially with a strike price around 55. That would be interesting. In the next earnings season, could companies skip their forecasts again? I mean, their earning guidance, yeah, you don't have to guide. I mean, it's going to be interesting going into next quarter earnings season because unless we have some breakthroughs with this tariffs, and again, companies are going to have a really hard time with CapEx and forecasting what they're doing. You know, all right, steel tariffs, all of a sudden they're 25%. Then they're after the close on Wednesday, they're 50%. Steel and aluminum on anything not in this country. Well, we still import 50%, over 50% of aluminum. And longer term, for big purchases, companies are having trouble because there are no trade deals. And even if you make a trade deal with Trump, it doesn't mean he can change his mind tomorrow. So that's going to be really tough with guidance for companies and long-term, just from their standpoint, long-term investment. There is no stability, and anything can change. Then you got the Trump taco trade. You know, we'll see if that holds up, or if now that Trump's aware of the taco trade, if he's going to untaco it. So from a company perspective, where do you put stuff? Because let's say you need 5-year investment plans. Well, Trump's not going to be in office in 5 years. Who knows who's going to be in office in 5 years? Who knows what's going to happen even after the midterms? So, yeah, companies can have interesting. What do you mean why your messages don't go through? I just saw that one. I want to check part PIU. You want to check a chart of this? Never even looked at this. There's not a ton of data there. I mean, let's see. There's so many cryptos. There are way too many cryptos. I mean, I'd just be using these harmonics personally. Key of 0.425 area, which is already proven to be the little support base on any breakdown. Minor support level is 0.57. The key breakout level would be 85 for me. So those are the key levels I look for personally. And there, you can still do harmonics. All right, so there you go. He means well. No comment. All right. It's just all over the place. That's my bigger problem. It's all over the place. You don't know what you're going to wake up to the next day. Nothing's changed going in the open. CVS could trigger daily double bottom. CVS also closing a bunch of stores. That is a complete valid double bottom. Thank you for pointing that out. I had not looked at CVS. I should have because of all the news. It's confirmed. It's confirmed a double. Let's see, 6409, 6404. So it did not trigger on Friday, but it confirmed on Friday. A little gap down today, but that's one to keep an eye out for. Bouncing off the 200, there could potentially, thank you, Christoph, for pointing that out. Potential bullish play in CVS, but it still needs a daily close above 64.09. Looking at the longer term chart of CVS, I mean, it's been on a bleed for a while, but there's lots of companies that, I mean, you want to talk about an uglier chart? That was the uglier chart. Walgreens Boots. Look at that. I don't understand. That company is. How can you? I don't understand either of these companies how they can mess up your business so much. How you can literally grind a drugstore into oblivion. There's two of. There is no setup, by the way. I was just pointing that out for the uglier chart. But CVS, if there actually could turn things around, there is that potential double play for a bounce play only. That's not a long-term buy and hold. Looking at longer-term chart and Target. Yeah, Target, Target's also, go woke, go broke. I'll be looking, especially if they end up taking out that CEO. I'll be looking, but in the short term, I'll be really interested in if Target returns this 87.5 area. That'll be really interesting for me. Because not only is it the 87.5 area, look at all this massive, it's a key support area. I'll start watching for patterns down here on Target. But if you compare Target versus Walmart, I mean, Walmart holding in there to the upside. Walmart, I got to take a look. There's my alert on Pepsi. Be keeping an eye on that too. Well, obviously you don't, Richard. So they screwed up their business models. All right. Again, let's just check on the tick. The tick today, minorly negative opening. Nothing major. Nothing major. Little rally with the minorly open, but everything holds up, again, with those key levels that I'm watching. Other than that, on any rally up here, I'll be watching for short-term sells around 59.20 unless we start basing above there. You're welcome, Anissa. Everyone have a wonderful trading day. Remember, you got the S&P manufacturing still expected to be an expansion in about 13 minutes. And then the more important one, ISM manufacturing coming out at 10, expecting to be in contraction. So pay attention. Minor in about 13 minutes, major in about 30 or 23 minutes. And then it's all clear. I mean, Logan, I don't know what the Fed's going to say anymore. So it's really, those are your big numbers besides your daily press briefing from the White House. And let's see what's going on the Trump front today. With that, I shall talk to everyone later. Bye for now.